Global markets are on the bounce back today after US President Donald Trump floats a payroll tax cut. Traders are recovering from Black Monday yesterday, driven by the crash in oil prices, which saw markets suffer their worst day since the 2008 financial crisis. So how can we use technical analysis to trade these choppy markets? With us to discuss is Raj Dhall, technical analyst, and he's a consultant for Silicon Markets. Raj, good to see you again.
No worries, thanks for having me.
Let's talk about Gann theory, because I know that this is a technical tool that you use a lot, and then we'll get into some of the market moves. But we've got a chart here of copper.
Yes.
Tell us about these fan lines. How do they work, and how do we use them to trade the markets?
Yeah, so copper's definitely been one of the worst hit markets because obviously what's gone on in China. So as the consumption of copper takes a dive, it's really hard to forecast where the bottom of these moves might take you in the end. So what we've done here is we use a Gann fan lines to kind of project lines into the future to try and help us work out where some of these markets might bottom out. And it is good to match them up with support and resistance levels as well, and use a good few other tools. But you can see it's worked quite accurately in the past with some of the wave highs and the wave lows hitting these Gann fans perfectly and using them as support and resistance.
So just for those who haven't necessarily seen Gann lines before, can you just tell us sort of how it's constructed and how they're used? So far you've mentioned support and resistance. Is that their main usage, would you say?
That is their main usage, and how we kind of put them together is that Gann previously used to like to match price and time together. So he would look at wave amplitude, wave length, and he used to call this the law of vibration, and really measure the waves, and then that would then help him project into the future based on Gann's law of 9 and a few other laws as well that he used to use about where to find turning points in the markets. And he used to use these fan lines really to project that if one of these fan lines breaks, where the next potential target could be.
So if I'm just going to be a little bit pedantic, when we're looking at some of these boxes, for example, the first box around sort of May of 2018, we can see that it tested this support Gann fan line and did actually break below. How neatly do you have to abide by the rules of the support line or the resistance line? Okay,
I would use them as a guide. So when it makes the first swing low, this is a daily chart, by the way. So when it makes the first swing low, I would use the bottom of that candle as a guide to basically say, look, if it breaks that bottom and it goes through the Gann line, you've got 2 confirmation signals of the move lower. The other thing that you can always do is put a 1.5% to 2% filter on the lines as well. But I wouldn't really trade the lines unless we get a close back above. That's what I would say. So if, for example, you want to use that area of support, maybe your bias is bullish for copper, you would wait for the test of the line, wait for the candle to close back inside the fan lines, and then take the long position, not just take it as it touches the line.
Okay, so talk to us about what we can learn about the future price action, because it looks as though we are approaching this next fan line on the downside for support.
Correct.
How do we kind of trade that?
Yeah, so this is quite an amazing thing, because you're never going to know this is going to happen when you're first plotting these lines. So obviously I would have put this one in May 2016 or something like that, and you can't even fathom in your mind that in 2020 we're going to come and hit 240. So you have to keep an open mind to knowing that the future is uncertain in this regard. So effectively all I'm looking to do is, we're in a bearish trend now on the daily chart, is looking to see how far this bearish trend is going to go. If it does hit 240 and wick through that line, if we do get a close back above, looking to maybe take a trade to the mean at around 260, something like that. That's the thought process behind it. If it does end up breaking through, so just like any other support and resistance technique, old support does become resistance, so it can break through, come back to test the fan line and go further down. If that is the case, and that's the 1/8 line at the bottom, you would then plot the Gann fan in the opposite direction and look for the opposite trades on the other side once that level's broken.
Okay, so when we're thinking about Gann fan lines versus traditional trend lines, do you tend to prefer Gann fan lines, and what's kind of some of the advantages of using these lines as opposed to just joining the lows or joining the highs if it was a downtrend?
Yeah, great. I mean, old trend lines are based on old price data, so you can only test something and it's only really confirmed when you get 3 touches of the trend line. This is kind of a mystic future tool in a way. It's kind of trying to give you crystal ball, so to speak. So the fact that they're so far in the future, and the fact that, you know, it's actually amazing how clear that they work, that's real, it's real targeting power and technical analysis. Whereas if you draw a trend line, you're hoping that the price will get back there, and that's the trend line that's for now, that's the current moment in time. But this is going to give you, you know, 8 or 9 trend lines that are going to be put into the future that you don't know are going to work yet.
And what tools do you like to use in conjunction with Gann theory?
Yeah. So definitely candlestick analysis is one, because that will give you the rejections. That's a huge one. So looking for shooting star candles, hammer candles, inverse hammers, that kind of thing. That's one that will give you the confirmation of the tool. But I'll also use Elliott Wave theory, because Gann's law of vibration is about measuring waves. So if we're in a 5-wave movement on the downside, I could use Gann to project where my targets might be. And inversely, if we're on a retracement phase and we've already had a few moves down and we're moving back up now, you could try and match the Fibonacci extensions to the Elliott Wave consolidation high in this case, and you can try and work out where it might stop to move back lower if the trend is going to continue.
All right, let's move on to another chart now.
Yes.
This is cable going back to October of 2019. Yep. This is a downtrend. We're seeing the Gann fan lines move in the other direction this time on the way down. Talk to us a bit about how we interpret this chart. Also, before we actually get into that, let's just also have a look at some of these retracement lines, because that's pretty fundamental to Gann theory, as I understand. How are those constructed, and how do they tie in with the broader picture? Okay, so the horizontal lines and the vertical lines is very similar to Fibonacci, in the sense that if you look at the numbers here, you've got a 25, 38.2, 5, 61.8 and 75 level there. So they're very similar to Fibonacci ratios. Gann used to like basically the geometry and number sequences, so 180 degrees, 360 degrees, etc. This reflects that. So if, for example, we're in a downtrend, the 50% line is going to be hugely important, and you can see that that's where the price stopped in this particular chart, because from measuring the first wave, which is again how this is plotted, and it's pretty amazing how it works. We then work out the projections for the extensions on the downside, and who's to say, you know, when we had that wave down on this one from the 0 to the 75 point, that the 50% point would be used in the future today. You know, it's quite amazing the fact that that works. And then the other thing is this is another confirmation signal to use it with the Gann fan line. So we've got the Gann fan line roughly about 131 there, but we've also got the 50% retracement line at that stage as well. The fact that they both work together, I used the candlestick, so the shooting star candle for confirmation, waited for the bounce to touch the Gann line, and actually took this trade for a short. Okay, so give us a sense of what you're expecting next from cable. Yeah,
so I still think we'll get a bit of a retracement to the downside, maybe testing 130, just maybe a dip below, but then I believe it will probably end up moving back up. And then this is a higher time frame chart. The next chart we have for cable is on a lower time frame here, and this shows the position for the entry of where it kind of stopped. So where it says 29.50 or so, and where we've got the 61.8, you can see it's also bounced at the moment, but I think we might get a deeper correction before we move higher, maybe to the next Gann fan line that's on the chart, because they've been respected so well already. I don't see why they're not going to be respected in the future. So when you move into a shorter term chart, do you use the same Gann fan lines as the longer term chart, or would you then apply new Gann fan lines? No, so I tried to do the best Gann fan analysis on the highest time frame possible, and then zoom in. So I would probably start with the weekly charts. In cable, there wasn't a nice lower high to attach the Gann fan lines together, so we couldn't get the price and time waves syncing up really. So I dropped down to a daily chart, and that's when we had the first lower high, which was where I connected the first Gann fan lines to, and that's what gave us this scenario. And yesterday, the dollar was so bearish to a certain extent that it's really hard to trade it as a counter trend strategy. You have to have some bravery in you to take a short trade when the dollar's so weak. So you know, you kind of click trade and close your eyes and hope for the best really, and it works. Yeah, and just one other quick question on the retracement lines. Yes. Obviously you can use Gann retracement lines, but also Fibonacci retracement lines. Yeah. How do you decide which one to use? I think it's a bit of a self-fulfilling prophecy here. They're so similar, and also in Dow theory we use a 50% line in that theory as well. So we've got three very common theories that all use very similar retracement lines, and I believe, to my knowledge, is that's why it works, because a lot of traders are looking at the same things. Even, you know, I think a 50% retracement for a long-term move, I think even a fundamental analyst might be looking at that as well. So that's why I believe it works.
Okay, let's move on to the next chart, which is dollar yen, a slightly longer term chart here, dating back to really the start of 2017. We can see that broadly this is a currency pair that has been in a downtrend on a weekly chart. We have had this very sharp move lower. We have seen a lot of flows towards safe havens, which is why the Japanese yen has been a key beneficiary amid the volatility. Talk to us about how the fan lines play into this chart.
Yeah, so this chart's really interesting because the last time we spoke, I think we actually called the long in dollar yen, and we caught that quite nicely based on chart patterns. So again, now the chart patterns have broken up and we've seen a target hit there at 112. It kind of works on it being a round number, so that's one of the things that I was thinking when the price kind of got there. And it's hard to tell that before when you plot it in time, because you're not going to know how far it's going to go to get to 112, you know, in today's prices. So as it was getting to 112, I noticed in my mind that obviously we're heading to a round number, and the Gann fan is very close to that round number, so I thought, okay, let's see how the price reacts here. And then we got the bearish candlestick in pattern. We broke the low of the previous candle on this chart, and then it was good for a short trade. So I didn't actually manage to capture the whole move, but you can see there that the target of below 102, you know, closer to the 100. Even that is quite hard to think whether it's going to happen or not. But now we've moved back up to 104.66 around that mark. Maybe this previous Gann fan line could be used as resistance before it moves lower. It'll be interesting to see what happens.
Yeah, that's really interesting to see how closely those lines are actually respected.
Yeah.
Here's a look at the FTSE 100 now, a longer term chart dating back to 2009. Broadly, we can see this uptrend, although a lot of that price action has been erased in recent sessions. I believe that the FTSE is down by more than 13% or so, wiping out past 5 years worth of gains, essentially.
Terrible,
talk to us about how we should be trading this, particularly within the frameworks of Gann.
Okay, so I've done two charts here because I think they're a bit amazing. This is measuring the length of the trend from the financial crisis. So I used that as a kind of trigger point, really. So get the low of the financial crisis, and that's the first trigger point of plotting the Gann. Then measuring the wave of when it made the first bounce to make the first higher low. That's where the Gann fan is plotted to. So the low to the first lower high, the first higher low, and then it gives you the rest of the lines in the future. So now we've hit the Gann fan line, and it rejected yesterday off this line. Unfortunately, it didn't manage to hit the 56.94 50% retracement level, which is the one that I was looking for, which makes me think that we might break back below. So I'm going to be waiting for that. So my bias on this trade is quite clearly, I think, with everybody in indices, is on the short side, even though we've had a bounce today.
Okay, and then here's a look at the shorter term as well. Any analysis to add?
Yeah, so this is from 2016 onwards. So this was after we've had a sell-off. So it's the most recent trend low that we could have taken. Even if we went on a shorter term time frame, we could have started at the beginning of 2019. But I didn't want to confuse everyone. But you can really see here the power of the lowest fan line, and the fact that around 60.97 on the downside there, that it's amazing how it just finds those levels, and that's where it bounces. I'm not going to profess to knowing why. I don't think anybody would give you that answer apart from Gann himself, and he's not here anymore. But yeah, it's just to the pip. It bounced off that level, and I just kind of feel that was so important. And you can see on the chart as well, even like in the middle where 2019 is, that level was respected quite heavily as well at the 50% line. So that shows again the importance of the 50% line again.
Raj, thank you so much for your analysis as always.
Thank you.
That was Raj Dhall, technical analyst at Silicon Markets. I'm Victoria Scholar, and thanks for watching IGTV.